when you're evaluating a liquidity-driven rally, fundamentals would be given 60% weightage, and 40% weightage has to be given to what kind of liquidity and when is the tide turning. So there are 2-3 barometers we look at, and not that fundamentals are not important. There's nothing more important than fundamentals, but that's still 60% weight, which is why it is greater than 50% weight. But respecting liquidity in a market like this is important. How do you understand liquidity? If you ask me, is on 27th August in Indian mutual fund small cap, since you alluded to small cap, a total 170 crores came on that particular day, 161 crores in active and 9 crores in passive small cap funds. And small caps are the ones where the tide turns first. So unless I see 5 consecutive days of small cap redemptions, I would say that still people have not come to reality and mean reversion has not begun. And you would want to be the first guy to pass the pillow if in a situation like this, if the tide turns. That's one thing which we see. Second number, which I think is very interesting and lesser is spoken about it, that you get to know the cash market buying and selling net numbers for 10 different categories. Banks, PMSs, AIFs, mutual funds, all these categories have been given separately. Like yesterday, there was 1,14,000 crores of cash market transaction. And buying was also equal and selling is always equal. So for every buyer, there is the same equal rupee seller. People keep saying that there's 23,000 crores coming in the form of SIP. If there's 23,000 crores coming in, there's an equal amount of seller. So liquidity is always going to be buy and sell equal on a specific day. So you'll have to see whether the person who's buying has a discretionary mandate or not. If you gave money to a mutual fund guy, he has no choice but to buy. So who's giving the buying will help you understand who's price inelastic, and that will determine the direction of the market. So to answer your pointed question, I think earnings can continue. If you look at Nifty earnings are -4% for the first quarter of this financial year, but if you X oil and energy, it is plus 11%. So I'm a little hopeful, but I'm really worried about the largest component of Nifty, which is 27%, is financial services, and banks are going through some real unprecedented crunch in the deposit degrowth.